Just like the stock market, the economy has been all over the place. If you look at some of the statistics, it would seem as if everything's okay. But when you start to break it down, there's a much different story. I'm going to give you the truth they won't give you on the mainstream today as it relates to what's happening with the jobs. The job situation is so key right now, more than ever before. The first thing I want to look at is the jobs lie, what they told you and what it actually is. The second thing, rates are going up. What does that mean for the average individual? And of course, the markets. And the third is the changes that are coming. If you stay to the end, you are going to hear some interesting information about what MIT is doing with the Fed. Let's begin. So you probably heard about this information. The 467,000 gain in jobs surpassed all economists' expectations. What is this? Wow, how fantastic. The market is green. Everything looks great, doesn't it? But what about what actually happened? Well, there's something called seasonal adjustments, and this is normal. The information that you get from any sort of report is going to give you the seasonally adjusted numbers. And it shows a 467,000 increase. But what about the unadjusted numbers? Well, in fact, it was the biggest change that you have ever seen. 2.8 million down, not 467,000 up. The numbers are not accurate. Okay, this smoothing out and playing with the numbers, the Labor Department, remember, I think it was 2 years ago now, the Labor Department specifically said that yes, we do have incorrect information going into the data we provide, but we are not going to make any changes to what happens here. Over time, it will correct itself. I mean, that is complete absurdity. It should not be allowed. And yet it is today. They simply just put a little disclaimer on their website that nobody's going to read. I'll say it here. You and I will know about it. And literally nobody else cares. They're just going to report, in this case here, the 400,000 number. That's the way it works. Monthly payroll changes post and pre-revision. Take a look. So these numbers that the markets were loving, oh my goodness, look how great it is. That's the blue lines there. Oh, this is great. Markets turning up. Everything's looking fantastic because they can trade on this information. The algorithms will pick it up. But what happens when you adjust it? Oh, it looks a heck of a lot worse. Millions and millions and millions of people are not working today. But you look at the way they calculate some of these things like the unemployment rate, and it doesn't do justice for what's actually going on. Take a look at what's happening for real. This article out of the Wall Street Journal. Shoppers are caught off guard as prices on everyday items change more often. Airlines, gas stations, large retailers have used dynamic pricing for years. Now others are trying it out, the strategy to deal with inflation. It's as if you're living in a place like Venezuela, where they can't print out the menus on, some sort of, let's say a menu, and they print it up. It's all nice. The prices change, or the menu changes once every 6 months, once every year. No, now it's a sheet of paper because every day that price is going to be different. Is that the kind of world we are living in right now? Oh, but it's only transitory. Why did people ever believe that? The markets are seeing buying the dip happening right now. Look at it. Major inflows year to date into equities. We watch as bonds selling off, money market and bonds, I should say, and equities have seen some inflows, ETFs, seeing that at this time. Of course, at the same time, let's not forget commodities like oil, which by the way, last I checked, hit $92 a barrel. What does it mean to you though? Like, who cares about $92 a barrel? Who cares about 1.3% of a flow into equities? People want to know about this. And I'll tell you right here, look at it. This is coming directly from the UK government website. My friends in the UK, check it out. They're talking about how energy costs are rising, and this, just showing you here, there's a bunch in here, but I just took this section. The energy regulator announced this morning that the energy price cap will rise in April to 1971, an increase of 693 for the average household. The cap, which had already been risen just recently, is now going to be increased. You can argue this is why it's happening. What's important is what you have to pay. If you are in the UK, expect in the coming months to pay more for your energy. The same service, higher price. Is it ever going to come down? Maybe at some point. Could come down at some point, sure. Is it going to come down at this time when people are being hurt the most? No. And part of the reason why this is happening is because of all the excesses that we have today. Real estate prices, food prices, energy prices, equities, everything. Everything is going up like crazy, and people can't keep up. So we can see this right here. Just once again, I want to highlight what's been happening. Okay, I just in this previous section here, just wanted to show the fact things are getting crazy, and it's affecting you, the individual. Let's talk briefly here about the financial side. This is the largest outflow, the 9th largest outflow weekly from investment grade and high yield bonds at a time in which, there's, let's just say it's wacky going into these markets right now. I'll show you more about that in a second. Fed to start rate hikes with a bang? Not likely, but they expect it. They do expect it. So the thought here is, will they increase rates by 0.5% versus 0.25%? And, it's not likely. They don't want to shock the markets necessarily, but it's becoming evident now that in about a month or so, we will see the Federal Reserve increasing interest rates by 0.25%. The markets, bond market and equities, haven't had to deal with this in a long time. At this most critical juncture, in which the job situation is, let's just say, it's not good or bad. It is very strange in many ways, because there are some people who are able to demand a much higher price for their time. They could say, I'm going to quit if you don't give me a higher price, and they're getting that. Others can't find work. Others are, in a better position than they've ever been, and others are status quo. But certainly it's strange. When you see the seasonal adjustments and all this nonsense that's going on, we don't know what the truth is. But we know that the data that they provide us is inaccurate. That is very clear. I've been documenting it here on this channel for a long time. Look at what's happening with German 5-year bonds. This was trading in the negative at almost 1% in the negative. You put your money in, guaranteed 5 years later, you would have 1% less. That doesn't even factor in inflation. But now we've seen the turn happening, okay? You could look at that right now. It is not much over zero, but that's where it is. It hasn't been here since 2018. So things have already changed. This is going on right now today in the bond market. You don't have to necessarily wait for the central banks to take action, because the markets are always going to be pricing it in different things, whether that's a particular stock and actions that that company takes. The market may price it in beforehand, and you may actually see that going on in the bond market in its own way. Amazon has an average 12-month return on 100% on share repurchases. Right now, Amazon purchasing billions of dollars in their own stock. And so what the suggestion is, historically, Amazon has done very well after doing some repurchases. 12 months, over a 12-month period, 100% returns. Are we going to see the stock double in the next year? I don't know. You tell me. What do you think? Put that down below. Stock did really well, but you can see where it has been. I hope I had this right up here. Take a look at this. If you see AMZN, look at that rise. I mean, it's up, it's down, it's all over the place over the last little while. If we go back, it has now found its way back into its range. It's been in this range for many, actually, if I go back here, July of 2020. Okay, so it now has, after falling out of that range, it has come back in, which of course is bullish for the stock, but it was the only stock for the most part carrying the entire NASDAQ into the positive, literally riding on its back. Crazy, right? One of the biggest, I should say the weakest links right now today has been the commercial mortgage-backed securities. I've said this many times before. And of course, malls are just, I mean, what do you want to call it? A ticking time bomb? American Dream Mega Mall nearly empties its reserves to make a bond payment. There's $820 left in the reserve fund. There's nothing left. Now, apparently, it's got a little while to make its next payment, so we'll see what happens. But it emptied the entire account. Will it be able to pay back? If not, what happens? What happens to the mall? What happens to the bondholders? What happens to all the stores within it? I mean, these things here, it's just such a liability today. You think you see brick and mortar, you see a mall, you see stores, you see shopping, but behind that is a financial instrument that most people, they don't grasp that. Now, two things really quickly. The first thing I'll show you momentarily talks about what's going on with robots. And I have made the case many times before that robots will be taking jobs soon. You know, you'll see them start with the cashiers, self-checkouts. You see the banks, having iPads instead of tellers, and you go to buy your coffee and you have to punch it in on a screen, or you order from your phone. You don't even talk to a human being anymore. And it's going to become more sophisticated, and certainly it has. Robots marched in 2021 with record orders by North American firms. More robots than ever before. That's the data. That's the stats. What do you think? I want to know what you think. And you waited to the end. So I want to show you this. And by the way, if you want some solutions, just wait a second, okay? Just hang on. We'll talk about that at the very end of this. Boston Fed MIT unveil model for electronic cash as policymakers mull whether to launch it. Well, apparently it can handle 1.7 million transactions per second. Electronic cash, Boston Fed. Not exactly the Fed, not exactly a trustworthy group, but here they are. Electronic cash. Sounds familiar, doesn't it? I am very concerned about a new currency coming in to replace this old dying model. Now, it would be fantastic if it was something better, but unfortunately, things, if you just see the trend of what has happened over the years, it didn't get better. It really didn't. The monetary system just continued to devolve over the years, and it worries me when you've got a group like the Boston Fed being involved in the next monetary system. But they'll use a crisis to implement this thing or whatever's coming, central bank digital currency and so on. Really quickly, people are wondering, what can I do? What can I do? What can I do? One of those things, we talked about energy, I'll give you that today. If you are worried about the prices rising, there are many cases, I've heard it from you, I've read, I've seen it myself. Take a look at the fixed priced options that you may have for energy. If you are comfortable paying what they're offering at that fixed price, contact your company. See if you can negotiate that, work that out. Some companies probably don't want it and others are fine with it. Fixed price, it's called. Find out about that, see the pricing compared to what you have now. Look, if prices go down, maybe that's ultimately won't be a good thing. You have to negotiate a term most likely. But see what you can do. Call the company, do what you have to, because these prices could become completely out of whack in this near future. While the months are still cold, there's still some time on that. We will see what occurs in the coming months, but do not sit idly by. Take action today. If you appreciate this information, hit that thumbs up button. I do want to thank you for that. Just there's a lot going on clearly on the channel, on this platform, and so on. I'm just here to produce what I can, and that's all. If you haven't seen this video yet, definitely check it out. Click it, and I'll see you there.